Welcome back to my YouTube channel. Today, I'm going to discuss about whether the market will crash in 2024. The market has been having a singular movement in one way. It has been going up and up. So everybody keeps on wondering whether it is going to crash. Although I don't have crystal ball in my hand, neither I can predict. But what I'll do is I'll take up logical analysis and bring home the point. So please stay with the video till the end. Put your comments, and if you like the video, don't forget pressing the like button. So let's get going. One of the important thing is that one major event which is behind us is the election 2024 Indian election, and there was a short reaction due to that election result on 4th of June. In a day that got recovered because Modi government came to power, although not with absolute majority, but NDA owned, and the policies and ministries continued like the previous government. So those policies are likely to get continued. Now the next important event is going in front of us is budget 2024 for the final budget, which will be presented during end of this month. And budget has been historically a very important event, but during Modi regime, the importance of budget is slowly getting diluted. It becomes more of a continuity measure, and not major events are covered in budget. Although it certainly shows the direction of the government in this budget, but not like the previous governments. It's a stability government where things are continued, policies are normally continued, so it becomes very difficult to expect something drastic during the budget. Looking back at the world scenario, major economy like US is going to see election, and just before yesterday there was a shootout at presidential candidate Mr. Trump. All the democracies really condemn this type of shooting out, but chances are Trump will sail through because after the shooting, and also he used to have better movement compared to Joe. US economy, if you look at, there have been a talk of rate cut for quite some time. Loan to GDP ratio or debt to GDP ratio of US, it is 120% plus. This means for 120 rupees of loan, there is 100 rupees of GDP value, which is very high. And US government has been just printing notes and continuing this, not sure how far it is going to. There are some analysts in US market, some very good, very known investors who believe that there's a bubble in the US. And if the bubble busts, there could be implications in growing economy like India, and our market will not remain untouched. Coming back to Indian condition, let's look at three factors. Let's look at Nifty valuation. Whether Nifty, which is going up and up, how it really is valued in terms of price earning. Like if there's earning going up, there's all the reason that the Nifty should go up. That is one point we will certainly look at. Look at from that perspective, what are the major falls in the past, in the last 20, 25 years in Indian market, and what drove them. So basically, when the market starts going the way it is going today, and the fundamentals are not there, it requires a trigger to bust. It's something like a balloon is blown and there's a small peak inside the balloon will burst. So similarly, the market needs a trigger, and the valuation has to be really overblown. So we look at that point. We look from the point of Nifty valuation, P ratio, PB ratio. Are they in respective range or they have gone out of control? I'll also look from the perspective of mid-cap valuation, because mid-cap shares have shown a big run-up. And then, based on all this discussion, we'll bring home certain inferences for our consumption. The point comes whether we should sell out everything and come out. Should we invest at this level, or we should be sitting idle? So we'll answer all these questions. Let's remain engaged, look at the video and get going. Here in the chart of Nifty P, here when you look at, this is starting 2000 to 2024. The dark green is the Nifty valuation is very low. So this could have been really a good time to invest. The light green is valuation getting expensive. And the red one is Nifty has gone very high actually. So this is the chart when you look from 2000 onwards. And now here we are in 2024 June. So here, as you can see here, the Nifty P ratio is 23.14. So what exactly it means? And the color shown is here light green. This means it is not really out of proportion. The earnings have been growing, and so is the Nifty is growing. And when you look at the chart, here you see two graphs for this 20 years, 24 years time frame. The blue graph, which is the P ratio, and the orange one, which is Nifty value. So Nifty value has gone to around 24,500, which appears very high. But when you look at the Nifty P ratio, the median PE is somewhere near 20.73, 21 actually. And today, the P is 23.32. So, and here, this is first sigma, one sigma up. This is second sigma, this is third sigma. This is fourth sigma, and here it becomes really very dangerous if the ratio comes here, which you saw here close to 42 during 21 time period where the earnings fell down drastically. And obviously, during COVID, the valuation was very steep. But after that, there have been recovery in the earnings, and although the Nifty has been growing, but this is not very. So as per the P ratio, P is little higher, but not beyond 1 sigma, which is a very positive sign. So we cannot say that Nifty valuation has gone out of control. So just look at the respective falls. There was a fall here sometime in 2008 time frame where Nifty fell from 6,272 to 2,573. So when you take the percentage, this is almost 60% fall was there during 2008. Then another fall was in 2011 where it fell from 6,312 to 4,544. In this case, the fall was about 29%. So here 60%, here 29%. The third was 2015-16 where it fell from 8,966 to 6,9671, 23%. And recent, during the COVID, the fall was from 12,362 to 7,610. Is about 39%. This was the largest fall. After that, after 21, this fall got covered in 1 year, less than 1 year. And then it has been seeing only upward trend. There was some 7-8% fall here during 21-22. So the question comes, is it market going to see a major fall? Is it going to crash in 24? Or it will have some maybe a small correction? Now let's look at the PV chart. As per PV chart, it appears that market is not out of control completely. Here, the PV is, again here, white shows little overvalued, but not really that much overvalued. So PV, median PV here is 3.453 and PV actually is 4.22. So therefore, here also it is within 1 sigma. This 1 sigma, 2 sigma, 3 sigma. So, if you look statistically, it is not far away. So on these two valuation, it appears very decently that, the P is not completely out of sync. Now let's look at Nifty mid-cap valuation. Here the mid-cap chart for about last 15-20 years. Now we look at the mid-cap. Here we have got two things, moving average for 200 days and 150 days. Now when you see here, this is trading both at higher than 250 days. And up to 2021, the mid-cap was going very slow. And after that, there have been a spike really. A small correction came here sometime during Feb 22, and then it has been only seeing one way rise. When you look at the P ratio of Nifty, 27, and today the P is 43. So actually, when you look at the mid 150 index, or what do you call it, mid cap 150, which is really represents the market, there is a huge rise, and stocks here are very overvalued. So when you combine these two, and then when you look at the large cap valuations have not grown. Look at the HDFC Bank, look at Reliance Industry, Asian Paints, Hindustan Unilever, and so on and so forth. The many one of them, even during last 2-3 years, it has hardly moved by a few percentage points. So when you combine all these adoration, you come to the following point. There is no severe gain in all large cap. Mid cap is overvalued. It has run up very far. And Nifty P is under within 1 sigma. Mid cap P has gone much beyond. So what we should be doing? Should we in this case completely sell out everything and come out? Answer is no. You would also see when you look at the Nifty chart that even during 2021, even though somebody has not sold even a single stock before the crash, today he has a huge profit. So one thing comes, that has happened during all fall. So whether you sell or you don't sell, you are going to get advantage of the rise in Nifty which is happening, and it will continue to be happening because Indian economic scenarios are in that direction. The one thing is there, you don't sell everything and just get out. That is for sure. Second thing is, since the Nifty mid-cap valuation is very high, so you should look at all those stock which has got more than 100 PE and examine Should you book partial profit? I am booking profit in those type of stocks where the P is very high. And if you see the long term, it has got prospect, then keep some part of it. And third thing is event which is coming budget. So normally when you look at the Indian budget, out of the last 50 budgets, 47 times after budget, there have been a fall. So normally when there's a rise before the budget, after budget there's some correction. And because this happens due to psychological reasons, because market start expecting much and all the expectations are not met, so therefore there's some correction. Therefore, what you should be doing? I said you don't sell everything and go out. Stay in the market, book partial profit in mid cap, accumulate some cash. Because whenever, if you get opportunity, I believe that in a couple of months you will get certainly opportunity. Some trigger will come which will help the market to retrace back, or there will be some reduction in the P. It might fall by 10% or maybe 5 to 10%. And there it will have opportune time to get more number of shares with the cash you have. So friends, going forward, market crashing in 24 doesn't appear to have any significant factor which says that market is likely to crash and then run away and sell everything. That is for sure. So what is the lessons? Stay invested, accumulate some cash, book profit in midterm, and be very cautious about new investment. When you invest your money at this point in time, look at the evaluation. Evaluation is high, be very cautious. The channels, the media, they will keep on talking about investing because they are in that business. Their main function is to and spread the news. Therefore, they will keep come here. This is buy sort of recommendations. Don't get into that trap. Otherwise, you will be really trapped. So be very selective. If at all you invest in those stocks which are not valued too much or which are much in range. Have some cash so that when there's a fall, you can buy and then enjoy the thing. So I hope you liked today's little deliberation. If you liked it, please press the like button. Circulate this through your channel to your friends, colleagues and others. And if you remain with the channel, thank you so much for your time. Jai Hind, Jai Bharat.